Hello, traders. Gary Wagner here. Approximately 12:12 in Honolulu, 5:12 in New York on Monday, 24th day of January 2022, and this is the daily report for gold and silver. Gold had significant gains for the first trading day of the week, gaining $11.70 today, and April futures is currently fixed at $1,843.50. Spot gold also had significant gains and is currently fixed at $1,843. Gains in gold, along with dollar strength, are really indicating that the majority of today's gains in gold is in direct response to raised concerns about rising geopolitical tensions between Russia and the Ukraine. It was announced today that the U.S. is putting 8,500 troops on standby. We did have a mixed bag in the precious metals today, with palladium and gold trading higher, silver and platinum losing some ground. Silver lost about 1.2%, a 28-cent decline, taking the most active March silver futures contract to $24.03. The most significant gain in the precious metals markets today was in palladium futures, gaining $31. That is an increase of about 1.5%, taking the most active March contract to $2,136 per ounce. This first chart is a daily gold chart, but it is a longer-term study that has two distinctly different Fibonacci retracement data sets. The first one begins in June of last year, when gold was at 1920, down to the lows of 1678. That occurred during the second week of August. Our studies also incorporate a much shorter-term data set that begins on November the 3rd, when gold hit a low of $1,758 to the high of $1,879, and that occurred on the 16th of November. There are two fairly important components that I do want to look at, and first is the support level, which is based on the Fibonacci harmonics that's created between the long and short-term data set. The 61.8% Fibonacci retracement from this longer data set comes in at 1828. The 38.2% retracement from the shorter data set comes in at 1833. So I believe that there is fairly decent support between $1,833 and $1,828. When we look at resistance, that of course is the top of this data set that occurs very closely to the 78% retracement of our longer data set at 1867.50. So I believe that this level is definitely a level of major resistance, with the first level of resistance occurring at the recent top. That comes in at 1,848, and the 23.6% Fibonacci retracement level at 1851. As I said during our price board, because of the fact that we saw dollar strength today, coupled with a strong move in gold, and the fact that the tensions continue to rise between a potential invasion of Ukraine by Russia as they continue to add more troops to the border and simultaneously are having military exercises in an adjacent country, we can say with some level of confidence that the vast majority of today's moves were in response to the rise in geopolitical tensions. Now, that is also a wild card in that the outcome of that is widely unknown, and the Federal Reserve tightening its monetary policy is for the most part factored in. The one thing that we are going to want to watch very closely is the combination of these two events, the FOMC meeting conclusion, as well as increased tensions on the Ukraine and Russian border, could most absolutely increase our level of volatility in the market, and we could see rather large price swings as those two events begin to unfold. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.